joins us now, Rod, and I think you're in a sun care factory or facility, which is what helped propel the stock. What's driving your bullish outlook? What are you seeing from consumers?
Hi, Sarah. Good afternoon. It's great to be with you. And yes, I'm at our sun care manufacturing plant where we make banana boat and Hawaiian tropics down here in Florida, visiting the team down here. And we're on full 24/7 production at the moment. Demand is very strong for sun care. As you mentioned, mobility is ticking back up. And as markets reopen, particularly domestically here in the United States, we're seeing demand increase for sun care. And we saw that pivot towards the end of March, beginning of April, and it continued throughout the month. And as we see it here in May, continues as well.
And so in that sense, reopening is good for you as well as it might be for your shaving related products.
Yeah, that's right, Will. For sure in sun care, we're positive on the future, not only in terms of the category growing from here across the summer and potentially a longer than typical travel season. So, that gives us some tailwinds in the back half of our year, which ends September 30. And then as you referenced shaving, we saw last quarter, while still negative as a category, it's getting sequentially better. And as people become more mobile, more social, get back out there, and even start to return to work in some capacity, we see the category continuing to improve. And encouragingly for us, we were actually up 1% in the category 1% in the quarter just finished, January through March.
So shaving is back and fragrances are back as people see each other. I guess that's good. They're taking care of themselves, Rod. We learned that from Cody earlier on the show. What about wet ones? This has been what has driven the most growth during the pandemic. I noticed a decline last quarter. So is this one of those things that is not going to be a permanent trend where we've adapted our behavior toward sanitizing wipes, or is it?
Yeah, I do think it's a permanent trend, Sarah, towards higher consumption of hand hygiene and wet ones. The leading brand in the hand hygiene segment, which is our brand, we're very bullish on the future for the category. I think the demand is going to be higher and very durable. What you're seeing in the quarter that we just printed was a peak load situation as the pandemic hit last year. And we're in a period right now where, frankly, consumers to a certain extent and retailers have more inventory, and we're working through that. As they do work through that, we're confident retailers will consolidate the shelf back to leading brands, and that consumers will care about hand hygiene well into the future.
So, Rod, on inflation, I noticed you're one of the few consumer staples companies that did not miss on gross margin. So were you able to push along those higher costs onto consumers? Is that coming? What is that looking like in your portfolio?
Yeah, a lot of the gross margin progress you saw was generated by lots of different levers being pulled within the company. First is its great cost management and good work around cost of goods. And despite a heavy inflationary period that's hitting us now around materials costs, logistics costs, and wage pressures, we were able to actually offset that on the cost line with other good work around cost savings, as well as revenue management. It's a growing capability within the company where we look at our product price mix ladders. We've taken pricing on wet ones. We took pricing on sun care a year ago, and we'll continue to monitor and take pricing where we think it's warranted. Frankly, we're always going to be competitive on price, but working across portfolio mix, revenue optimization, and just good daily work around cost management. We were positive on margin in the quarter. We're proud of that, and we think that's something that can continue over the coming quarters, regardless of the inflationary environment we see ahead.
Shepard Smith here. Thanks for watching CNBC on YouTube.